While those two names are considered the headlines, there are a number of other massive IPOs in the pipeline this year, like, of course, Anthropic, Databricks, Strava, and Stripe. So how could OpenAI and SpaceX set the narrative for the rest of these companies? Let's bring in big technology founder and CNBC contributor Alex Kantrowitz. Alex, good to see you.
Good to see you.
Obviously, this environment's starting to crackle here a little bit, and there's a hurry by these companies, SpaceX, OpenAI, to get out there, whether it's because you'd want to kind of make your claim on the capital before Anthropic shows up or whatever. But how do you see this developing, even in terms of the horse race in AI?
Well, I think the horse race that we're looking at specifically is going to be this OpenAI Anthropic horse race. OpenAI is obviously racing to get out first. A year ago, you'd speak to OpenAI about IPO, and they would be like, yeah, we don't want to do that. Sam Altman said it would be very annoying to be a public company's CEO, but now they're racing, obviously, to go public. And this is probably because this is about as bad as it's going to look for OpenAI. Now, obviously, we just saw some revenue numbers. They're doing well. But Anthropic has been gaining fast. The thing is, Anthropic is going to hit some sort of threshold where they're not going to be able to deliver their services the way they want to because they haven't been spending as much on infrastructure as OpenAI has, and therefore we see that they're going to be profitable. I don't think that was by intent. They would rather continue to lose money. So OpenAI is going to have a faster growth rate with Anthropic, and it's going to be pressed to get out first right now, tell its story, and then over time, because it's invested in compute, then lap Anthropic. But you don't want Anthropic to come out first, set the narrative, look like you're behind, and say, we'll try to figure it out eventually. You want to come out first and say, here's what we are. We're the first pure AI IPO. Invest in us, give us the money.
So not seeing the S1 at all from either of these. So you're basically saying look through, and Anthropic looks to be the better, OpenAI looks to be the better business, even though initially it will not.
Well, look, this is because this is so early, and we're moving at such speed. We've never seen an industry move at the speed these companies are moving at. I mean, Anthropic was founded 2021. We're at 2026. We're seeing astounding numbers, 10 billion in a quarter. So a lot of this is based on projections. But the projections are that this continues to go exponential. And if it does, then deliberate, smart investments in data centers, the type that Anthropic has been doing, may be something that backfires in the future. So what OpenAI has is the bigger risk, right? It has made these bigger investments in data centers, so you could see much bigger revenue in the future because it will be able to deliver to customers and potentially win people over from Anthropic. The other side of that is, if we don't continue to see the exponential progress, then you could be left with a pretty big bill for OpenAI and its suppliers that it won't be able to make good on.
There's a fascinating big picture question about where ultimately the economics are going to accrue in this whole trend, right? So let's say OpenAI and Anthropic, they're public in the next 8 months or something like that. They have a couple $1 trillion of market cap. That enables a lot of investors to say that's the way I'm going to be playing long-term AI growth. Right now, we mostly have the infrastructure food chain to invest in. And I just really do wonder if it's going to be about, okay, compute constraint that helps the hardware makers, but ultimately, is the value going to migrate toward, the platforms and then applications on top of it?
Yeah, so I think, first of all, I think the hardware is going to do fine. I think NVIDIA and that crew is going to be okay. But a very interesting thing has happened in recent months, which is that previously, businesses like Anthropic in particular, they were API businesses. So let's say a consultant would go with a bank and build a better dashboard with AI that synthesizes information and delivers it to bankers. But now what we're seeing is the actual applications that these companies are building, the Claude codes, the codexes of the world, are consolidating value within the foundational labs. I mean, when you think about where is the AI money going, we don't really see a lot of secondary or tertiary AI companies.
No.
Where are they? They don't exist because a lot of it is being captured by the foundational labs themselves, which is kind of a curveball, which we hadn't seen before. So it might end up being that you could play the infrastructure, right, the chips that are enabling this stuff, and you play these big apps, the super apps from the OpenAIs and the Anthropics.
Where does the money come from? I mean, if we're thinking of the market, like, we're thinking about the ATM effect. Where is the money being withdrawn in order to go into an OpenAI or Anthropic?
Well, it's going to have to show, there's going to be progress that's going to need to be shown within enterprise, right? A lot of this is not a consumer boom. This is an enterprise boom. It's companies saying, I can take AI, put it into action, and get 2x, 3x my investment because my employees will be more productive, because I can serve my customers in ways that I couldn't. And right now, we're kind of at this moment where everybody's just running towards that, with this expectation that it's going to pay off. Like the ROI calculations are just being made and people are feeling good about it, but we're not in definitive territory yet. If the technology proves the ROI, then we're going to see continued investment within these companies. And clearly the pilots have gone well up until this point, but that's not a settled story yet.